Investing can feel like a roller coaster with ups, downs, and unexpected twists. But what if I told you there's a way to add some stability to your portfolio without sacrificing growth? The answer is real estate, and you don't need millions to invest. That's where REITs, real estate investment trusts, come in. In this video, I'll be showing you and John 6 REITs that are built for the long haul. I'll explain why these are the best REITs to invest in and how much you can earn from each with a $10,000 investment over 10, 20, and 30 years. In the end, I'll show you a REIT that has the potential to turn a $10,000 investment into over $1.5 million and pay over $14,000 per month in dividends. But first, what are REITs? Alright, before we jump into the specifics of our top 6 picks, let's take a moment to break down what exactly a REIT is and why these investment vehicles might be the perfect fit for your portfolio. A real estate investment trust, or REIT, is a company that owns, operates, or finances income-generating real estate. This can include anything from shopping malls and office buildings to apartments and hospitals. The best part? You can invest in these large-scale properties without having to manage them yourself. REITs pool capital from many investors to purchase and manage these properties. By law, they must distribute at least 90% of their taxable income as dividends to shareholders. This means you get a steady stream of income without lifting a finger. REITs offer an easy way to diversify your investments, as you're spreading your money across a range of properties rather than betting on a single one. Plus, they're accessible. You can buy and sell REITs just like stocks. Now that you've got the basics, next up are 6 REITs ranked from good to absolute best REITs based on their potential to add value to your portfolio. Let's kick things off with Agree Realty Corporation, ticker symbol ADC. If you're looking for a reliable long-term investment in the real estate sector, this one should be on your radar. Agree Realty is a well-established REIT that focuses on owning and developing properties net leased to major retail tenants. What's great about ADC is its focus on quality over quantity. They target high-credit tenants like Walmart, Best Buy, and Dollar General, which means the risk of default is relatively low. This focus on top-tier clients is a key factor that sets ADC apart from many other REITs on the market, providing an added layer of security for your investment. They currently offer a dividend yield of 4.12%, backed by a consistent dividend growth rate of 5.86%. Combine that with an average share price appreciation of 9.46% and you've got a recipe for long-term success. But what does this mean for your investment? Let's say John starts with $10,000. After 1 year, his investment could be worth $11,358. Fast forward 10 years and that same investment could grow to $33,862. After 20 years, you're looking at $104,182. And if you're in it for the long haul, after 30 years, your investment has the potential to reach $299,762, paying around $3,846 in annual dividends. When you add up the total capital appreciation and dividend reinvestment, the total value added to your investment would be around $289,762. So why should you consider Agree Realty for your portfolio? It's simple. Of course, no investment is without its risks. The real estate market can be volatile, and economic downturns can impact even the most stable tenants. But with ADC's strong portfolio and focus on essential retail, it's well positioned to weather most economic storms. Just remember to keep an eye on the market and adjust your investment strategy as needed. Next up at number 5 on the list is Essential Properties Realty Trust, ticker symbol EPRT. This REIT is a newer player in the market, but don't let that fool you. It's quickly become a standout option for long-term investors. EPRT focuses on single-tenant, net-leased commercial properties, which means they lease out properties to individual tenants, and those tenants are responsible for most of the property's operating expenses. This setup is great for minimizing risk while ensuring a steady income stream. One of the things that makes EPRT match the REITs is its growth potential. Currently, EPRT offers a dividend yield of 3.67%, backed by a dividend growth rate of 5.7%. Additionally, EPRT's average share price appreciation of 15.18% is one of the highest among its class, making it a solid choice for investors looking for both income and capital growth. Now, let's break down what this could mean for your investment. If you invest $10,000 in EPRT today, after 1 year, that investment could be worth $11,885. Fast forward 10 years and your investment could grow to $50,674. After 20 years, you're looking at a significant increase to $225,122. And if you hold on for 30 years, your investment could soar to $952,199 and pay $1,686 in annual dividends. When you factor in the total capital appreciation and dividend reinvestment, the total value added to your investment would be an impressive $942,199. These returns sound good, but there are even better options to come. In the end, I'll show you a REIT that has the potential to turn a $10,000 investment into over $1.5 million and pay over $14,000 per month in dividends. Back to EPRT. Why should you consider Essential Properties Realty Trust for your portfolio? First, its focus on single-tenant net leased properties reduces operational risk, making it a safer bet in the often volatile real estate market. Second, its strong dividend growth rate combined with high share price appreciation offers the best of both worlds, income and growth. This makes EPRT particularly attractive for investors who are patient and looking to maximize their returns over the long term. Moving on to our fourth REIT, which is Rexford Industrial Realty, ticker symbol REXR. This REIT specializes in industrial properties, particularly in Southern California, one of the most supply-constrained industrial real estate markets in the United States. REXR focuses on high-demand infill industrial properties, which are critical for businesses that need proximity to large consumer bases, making it a highly strategic investment. One of the standout features of REXR is its strong growth metrics. Currently, it offers a dividend yield of 3.21%. While that may not seem extraordinary at first glance, it's important to look deeper. REXR has a dividend growth rate of 13.49%, which is incredibly robust. Combine this with an average share price appreciation of 13.56%, and you're looking at a REIT that can deliver both income and capital gains. So let's break this down with some numbers. If you were to invest $10,000 in REXR today, after 1 year, your investment could be worth $11,677. After 10 years, that investment could grow to $47,091. Fast forward 20 years and your investment could be worth an impressive $221,332. And if you're patient enough to hold for 30 years, you're looking at a potential value of $1,038,308. After 30 years, your dividends could total approximately $27,985 annually, translating to a monthly income of around $2,332. When you add the total capital appreciation and dividend reinvestment, the total value added to your investment would be a remarkable $1,028,308. Now we move on to the top 3 stocks to buy and hold forever. At number 3, we have American Tower Corporation, ticker symbol AMT. Unlike the previous REITs, which focus on retail and industrial properties, AMT is a leader in the infrastructure REIT space, specifically in telecommunications. American Tower owns and operates wireless and broadcast communication towers, a critical component of the global digital infrastructure. With the world increasingly relying on wireless communication, AMT is in a prime position to benefit from this ongoing trend. The expansion of 5G networks further amplifies AMT's growth prospects as more towers and infrastructure are needed to support this next generation of mobile connectivity. It currently offers a dividend yield of 2.85%, which may seem modest compared to other REITs. However, where AMT truly excels is in its dividend growth rate of 15.22%. Additionally, AMT has an average share price appreciation of 8.66%, making it a solid choice for investors looking for both income and growth. So let's look at the potential returns. If you were to invest $10,000 in AMT today, after 1 year your investment could be worth $11,151. Fast forward 10 years and your investment could grow to $32,515. After 20 years, the value could rise to $142,614. And after 30 years, your investment might reach an incredible $1,074,517. What about those dividends? After 30 years, your dividends could total around $152,644 annually, giving you a monthly income of about $12,720. This shows AMT is a REIT that can provide both stability and significant long-term gains. It's an investment you can hold on to with confidence as the demand for wireless communication continues to expand globally. Now remember, in the end, I'll show you a REIT that has the potential to turn a $10,000 investment into over $1.5 million and pay over $14,000 per month in dividends. Next on our list is Extra Storage Space, ticker symbol EXR. This REIT focuses on self-storage properties, a sector that's shown remarkable resilience and growth over the years. As people accumulate more belongings and businesses require additional storage solutions, the demand for self-storage continues to rise. EXR has positioned itself as a leader in this space, owning and operating a massive network of storage facilities across the United States. One of the key attractions of EXR is its strong financial performance. Currently, EXR offers a dividend yield of 3.64%, which is competitive within the REIT space. However, what truly sets EXR apart is its impressive dividend growth rate of 14.52%. In addition, EXR boasts an average share price appreciation of 12.97%, making it an excellent choice for investors seeking both income and capital growth. So let's dive into the numbers. If you were to invest $10,000 in EXR today, after 1 year your investment could be worth $11,661. Fast forward 10 years and your investment could grow to $47,555. After 20 years, that amount could balloon to $239,032. And if you hold on for 30 years, your investment could potentially reach $1,281,149. But that's not all. After 30 years, your dividends could total around $61,394 annually, translating to a monthly income of about $5,116. When you combine the total capital appreciation and dividend reinvestment, the total value added to your investment would be an astounding $1,271,149. This shows the power of compound growth and the benefits of reinvesting dividends over a long period. Adding EXR to your portfolio is a no-brainer. First, the self-storage sector has proven to be remarkably resilient, even during economic downturns. People continue to need storage space regardless of economic conditions, which provides a steady revenue stream for EXR. Second, the combination of solid dividend yield with robust dividend growth makes EXR an attractive choice for income-focused investors who also want to see their investments grow over time. Finally, at number 1 and topping the list is CubeSmart, ticker symbol CUBE. Another major player in the self-storage sector. Like Extra Space Storage, CubeSmart focuses on owning and managing self-storage facilities across the United States. With the increasing need for storage solutions driven by both residential and commercial demand, CubeSmart has carved out a significant presence in the market, making it a solid choice for long-term investors. CubeSmart currently offers a dividend yield of 3.96%, which is attractive compared to many other REITs. However, what makes Cube particularly appealing is its robust dividend growth rate of 14.98%. This growth rate suggests that investors can expect their dividend income to increase substantially over time. Additionally, CubeSmart has shown an average share price appreciation of 10.64%, which when combined with its strong dividend growth offers a compelling case for both income-focused and growth-oriented investors. Let's break down the potential returns. If you invest $10,000 in CubeSmart today, after 1 year your investment could be worth $11,460. After 10 years, this could grow to $42,134. Fast forward 20 years and your investment might be worth $220,963. And if you hold on for 30 years, that same investment could reach an impressive $1,604,740. In terms of dividends, after 30 years, your annual dividend income could total around $175,387, giving you a monthly income of approximately $14,616. The total value added to your portfolio will be $1,594,740, with $774,016 coming from capital appreciation and $820,724 from dividend reinvestment. Want to get paid every week? Click the video on the screen to find out how to create a portfolio that can pay $200 every week, starting from the very first week.